Everybody, good morning. Looks like we got channel members Ivan, Jerry, Craig, Diane, Hugh, Mad, Rob, Mark, Ed, Donald, Lieutenant Colonel, Kevin, Darren, Ted. Good to see everybody. We've lost a few people. Like, you used to have Major John here every day. General Rush used to be here every single day. Kind of coming up light. Anyway, there you go, right there. S&P hanging out in that zone. I mentioned yesterday we might just go sideways below the resistance and above the supports. Ah, beautiful. And we have Prime Day reports that things are not all rosy for the consumer. We're seeing the initial Prime Day reports come in about 12% light. Let me see if I can pull any information. So we see this Momentum Commerce, which manages about $7 billion in Amazon sales across brands like Crocs, Beats, and they have uniquely available data. And we're seeing that Prime Day, the early Prime Day numbers, which Prime Day usually spikes off a big, I guess, purchasing boom. And Amazon obviously trying to move this to like Prime Week because we went from Prime Day 1 day to Prime Day 2 days. Now we're Prime Day 4 days, and it looks like we're trying to move it up to Prime Week and try to get almost. So you have the Christmas season, and we're trying to get this July season going. And I don't know. Now, this is what I saw. Amazon's own sales, not that big. And I haven't seen giant actual sales. I mean, look at that. Prime Day, 37% off. Like, yeah. If you don't use something like Camel to check out the prices, the 37% off, like I've seen a bunch of these discounts, and when you look them up, they're not actually big sales. 14%. There it is right there. Sales are down 14% so far with the same period last year. That kind of pushed Amazon's chart down a little bit, and I guess we'll see as this unfolds. Like I said, we have 4 days of Prime Day instead of just 2 days or even 1 day like we had the first time we ever had Prime Day. So are they diluting it? I mean, I get expanding it out because sometimes I haven't been able to, life has just been in the way and I haven't been able to participate in Prime Day. But at the same time, you got to be careful. Now, if you have no idea what I'm talking about, camel.com. Right here. Jump in, use this, check out the pricing. They track pricing history and for all sorts of things on here. You don't have to sign up. You don't have to do anything, but you can jump in here and look at anything and see the historical price. And they show you like the Prime Day sale on these is actually the lowest it's been on Amazon. Right there. So it's a handy site, camel. It's just the word camel 3 times in a row.com. I use that to kind of check out where deals are. So if that helps you, let me know in the chat. But it's, leave it up to JT to figure out how to track prices on Amazon. There you go. So anyway, I always, when I'm shopping for something on Amazon, I always pull it up and see if the price is high or price is low, because the prices change all the time on Amazon, and that's a way to track it right there. So, and you can put it in any product, like anything you're looking at Amazon. You just take the URL or the product code, the little first part of the URL. They have instructions on the site. You just copy it, paste it over to find that product, and then kind of tells you what the pricing's been. So ordered my mom and one of those sit on the couch bike things, and it was the lowest price. It wasn't the absolute lowest price, but it was like within $5 of being the lowest price ever on Amazon with the Prime Day sale. So that actually did work for that one. And so, all right, moving on. How do we make money today, right? So Amazon's charts down, breaking down below the 15-minute. The 30-minute coming up quickly. That was the reaction on that news that Prime Day sale is not going as awesome as maybe everybody hoped. First move down, retrace, second move down. So potential for this one to go further down. Funny how this chart stuff just works. And this potential, now we're getting a little bounce. So this may actually bounce on up a little higher and then get continuation lower. So we may actually see this do a 618 retrace right up to that 220 level before it rolls on down. Pull this up right there, 222-ish. So we might see price pop up here, find resistance, and turn down. That would be normal in a correction. Run the fibs, high to low. Oh, look, 618 and that arrow all line up at the exact same place. How does this crap work? I don't know sometimes. Amaze myself. And that would be the target zone down here, 215, 216, possibly lower. Let's see what that lines up with. Oh, the 1 hour roadmap line. Right there. Bada boom, bada bing, bada bang. So anyway, amazing, amazing. That'd be one of those A, B, absolutely beautiful corrections right there. I, B, C. ABC. Yeah, camel. You got it, Kevin. And I love it. Love it. So, did anybody know about camel before? I mean, there's other sites that do it. That's the easiest one for me to remember. Camel. S&P, just kind of hanging. Like we talked about yesterday. That initial pop, 618 retrace, another pop, another retrace, and we're just parked in here. There's no commitment to breaking out, no commitment to break it down. Just leaves us in a quagmire right there. Good morning, newbie Sandy. Yeah, camel's on hump day. Anyway, yeah, we can make all the jokes we want, but looking at the S5TW, jumping back up. Take this off of log mode. Oh. Let's go over here. Oh. Let's roll back up. We're up here. Took a dive. Now we've made a lower high. And we're starting to roll off. This is a cautionary tale on this stocks above the 20-day moving average chart right here. It's like a shot across the bow when we make the lower high. Back down to the bottom. This is a giant market oscillator. If you've never seen this before, S5TW, stocks above the 20-day. How do you trade it? You don't. This is just an indication of, it's like looking at your dashboard in your car, like it's an indication of one of the systems in the market. This is stocks above their 20-day. We've kind of been up at the top, and usually this is a giant market oscillator where we go from the top to the bottom, top, bottom, top, top to bottom, bottom, top. We've been maxed out at the top. Can't go above 100. That's 100%. These are percentages. Usually when we get above 80, that indicates the market's out of energy to the upside and we're about to take a spill. This one came down to 40, recharged, went back up, made a lower high. Now we're set for a potential dip down below 20. Usually we get down to 20, we're out of gas, and we got to recharge and go higher again. Now, this doesn't mean we're making all-time highs, and it doesn't mean we're making giant lows. This is the number of, basically the percentage of S&P 500 stocks above or below the 20-day moving average. This is above. So when we're down here, that means 80% is below the 20-day. When we're up here, that means 20% is below. 80% is above. Simple as that. Just reverse the numbers. They have to add up to 100 all the time. So S5FI also grinding this top area here. Stocks above their 50-day, a little bit slower indication of the market. Might have room to pop up to this 90 area. Usually when we do that, we get a big correction. Now, it doesn't have to happen fast. As you can see, that high, lower high, and then came all the way down here, but then shot back up, made yet another lower high, and went down to the bottom. This one moved slower. This took us from January 24 through April 25. Then we shot right back up very quickly, hanging out up here. Can we max it out any higher, or are we set to roll down? Now, this was a higher high here on the stocks above the 50-day, whereas it was a lower high on stocks above the 20-day. Stocks above the 200, still hanging out in the 50s, coming up off the lows there in April, and not really a strong indicator. We may see this double dip here, come back down before the next rally. If S5TW and S5FI go visit the bottom, this one may come back down into the lower 30s, 40s before we go on up to 80. Then we're still set to go on up to the top on S&P 500 stocks above their 200 a day. We don't, everybody was like, well, let's roll back in here and see what happened during the last major correction. The data is really thin back here. We don't really have that. It did take us a little bit to get down to the bottom. Let's see if we can change it to a line chart. There you go. And we were up here coming into 07. Now, interesting to me, when we did the same pattern we got in the market, we were down here. Like the candle pattern we have right now on the S&P 500. That one from 2007 that I've showed off a few times. This right here. This looks exactly like the S&P right now. When we did this, we did this right here. And we spent a prolonged period down here at the bottom. Hung out down here from October 08 until, so roughly April, when we came back above. So November, December, January, February, March, April. 6 months we hung out at the bottom. And then we went and maxed this thing out for like a year. There's July. There's July. So spent almost a year. After spending 6 months at the bottom, we spent almost a year at the top. Slow mover. Made a big dip, spent more time at the top, made a big dip, and then started oscillating again. Prolonged period at the top, big dip. Another. We tend to keep this one up near the top. That's where the market loves to be when we're trending, but then we take these spills down to the bottom, reset everything, then we go on another run, reset, another run, reset, another run. Ooh, big lower high, reset. So we're in this interesting period right here. This was a big exuberance. This, even though we pushed higher highs, the participation has been waning. We may need another prolonged period at the bottom to balance the market back out. That's what that chart kind of telling me. That's how I kind of read it. So just doing live look. This is not something I sit here and ponder all the time. Take a look at these once or twice a week, then move on. ES overnight, pushing higher. Can we get that breakout? Beautiful move up. Retrace, held the 618, setting up for that breakout above resistance. We can do that. Same target we were talking about yesterday, hadn't really changed. 63.45, 63.56, 63.87. These are on futures, not on the cash index. Don't get it confused. Those targets on the cash index. Oh yeah, look at that beautiful pop right there. Potential to run higher. Breakout. 62.96, 63.06. And then if we get super spicy, this level 63, 64 up here. If we hit that, 63.40 non-log, 63, 64 log mode on this big last pullback expansion here. We get that. Beautiful. Talk about this big pullback in March, April. The expansion up to that 63, 64, 63, 65 area on log mode, not log mode. I mean, it could stop at the 63.40 area. That's possible too. It's all possible. So once we get up to 63, that's time to be a little more cautious. We're highly likely to get up there. Highly, highly likely. But this may be the last push. Russell here. Oh, interesting chart I looked at last night. Check this out. Now, I've talked about how this move right here on the SPX back here was one big correction, but that is not the same chart pattern on NASDAQ right here. That was the low, and then this was an initial move up right here and a retrace. I was playing around with the chart. I was reading somebody else's analysis on a bubble pattern. I'll show you that here in a second. But look at that. That was a measured bounce right there. Beautiful. And then check this out. We went rocking and rolling to higher here, all the way past all my normal fib lines. 686 way the heck up there. That's kind of interesting. Now, if you look at this as like a wave 2 correction, put that on there. Look at that. Look at where we stalled. We stalled at the 1272, retraced. We stalled at that 272 expansion of the echo of the first move up, retraced in 2020. Now, in 2021, we struggled at the 1618. Wouldn't this be fascinating if we rallied up here to like 44,000? Of course, I don't have my fib lines snapped on properly, so that could be 35,000, 45,000. I don't know. Maybe 36 is more accurate. NASDAQ could shoot up here, but if we do that, that could kick off the bigger correction that takes us back down in this air zone. Somewhere around here. Yikes. Like a 75% correction. I found this very fascinating right here. Now, wave 2s, which that's potentially a wave 2, and wave 4s typically hit the roadmap line. So look, we haven't hit the roadmap line. So if we go up here and then get this big correction, might hit the roadmap line somewhere around 11 to 15 right there on NASDAQ. And then we go up for a wave 5. So this is probably a 1, this is probably a 2, it's probably a 1, 2, 3, 4, 5, 4, and a big 5 up there. That's interesting pattern there. When we look at the S&P, this was one big correction, then ended up in a lower low. So this was all part of the same correction here. That was an A, B, C. But that's not what the NASDAQ was doing. The NASDAQ did all of its correction on the A move and then did a 1-2 where the broader market did a B, C right there. I find this quite fascinating. So we could actually push this higher. Like I said, that's potentially further down the count here on the S&P. We have a lot more history. And NASDAQ kind of started in the 80s, so the advent of big tech. What could push us up there? Maybe the AI revolution pushes us up on NASDAQ. So we could see the broader market do some sort of correction here while big tech still continues to perform. That would be interesting. Interesting market phenomenon. Of course, they do rebalance the S&P, so it's not a constant, but it is, they do try to keep it. Powers that be try to keep it somewhat managed. This is all, I find it all interesting, the difference in these. So, I confirm, I'll keep them. I did lock that chart on there so I wouldn't delete it accidentally or move it. Anyway, if that different view is interesting, let me know in the chat. So we might have some upside, like that blow off top potential there, or grind higher. This, I still don't expect S&P cash here to get above 7,000. Any big kind of meaningful way before we see a bigger downside. Russell here, whole different path. Entirely different. Entirely different. Look at this Russell. This one also started back here in the 80s. Whole different thing happened here. Like this doesn't look like either of those other two right there. It's kind of interesting. So this one might still be working on maybe its first move up and we get a bigger retrace here. That's small caps. So we could go into a period where US small caps really get hurt. I mean, maybe this was some sort of running correction, but it doesn't really fit that way. 1, is that a 2? And that's, the proportions aren't right for anything. Like this is messy price action. Difficult to really figure out here. Of course, that could be a 1, 2, 3, 4, 5, and we'd be complete here, and we actually be looking for a correction that brings us back down to here. It could be the 1, 2, 3, 4, and this be the little fifth wave move right there. We'll be starting a correction that could take us maybe a decade on small caps. It's interesting. Just, I started looking at bigger picture. Does everything fit with this potential for a bigger correction? So NASDAQ, it's kind of the oddball out at the moment. Oil, yesterday closing above the roadmap line. This is one to keep an eye on. If we can maintain that close above, start breaking back through the 618, that 73 area. We set up this bigger upside, 80s, 90s, 100 potential if things get really spicy. GC still set for this bigger correction here. I'm still thinking we're going down here. Still thinking. It's been a while since we've been back to that daily roadmap line. Like a long while. That didn't even hit. It's been since back here in November of 23. It's time to revisit, reset before the next leg higher. Bitcoin trying its darndest to push on out. If we see this push on out through a new high, I think we're going to see this popping up to the 120 to 130 area. If not, really get spicy up into here. If we get to that 150 to 170 area, it's game over. Like, that's the end. More than likely. There's potential to expand it further, but I would start looking to book your profits. Set your sales, trim it back. Things that were high risk, time to book them or set up protection. Things you were going to hold long term, just keep holding it. Like, it's not time to sell everything. It's just time to trim the aggressive positions. Ethereum still stuck in a sideways. NKD still grinding right below. Come on now. Pull it over. Still grinding right below that breakout. If we can break this out, we see global liquidity increase maybe up to the 50,000 area. Dollar, the bottom may be in here. Got this feeling like that might, there's still potential for downside, but that might be it on the downside. Might spend the next couple months rallying back up to the 101 area, retrace, and then potentially go higher depending on what happens on this correction. Breakdown support, we could go lower. Hold support, we can go higher. The upside potential on the dollar up around 130 to 140. Craziness. Crazy numbers. Crazy numbers on dollar index. And some people are like, how do you even play that? UUP is a dollar index ETF right here. Apple. What's up, Apple Dumpling? What's crack-a-lackin'? We've got resistance up here, 220. We're struggling at the daily roadmap line. First move down, put us down here. This retrace, put us near the 618. Next downside move could put us down around 120. Be careful on Apple. Amazon with the Prime Day quagmire. Struggling right here at the top of the resistance. First move down with a potential second move down. Could put us down around 140, 150, 160. Anything lower low than that 161 right there. Google, same pattern. I feel like a broken record, but until these patterns clear themselves up, this same pattern exists across most of the Mag 7s. First move down, second move down potential. That's absolute ABC. Absolutely beautiful correction. Meta struggling here at the top. Could still do it, even though it's a deep retrace. Some people are like, oh, but it poked a higher high. That's still valid in a flat. It comes back and double bottom, double top, double bottom. We can see that and it just goes sideways for a period of time right there. Now, if you don't mind a 50% correction, keep hanging. If you don't want to ride a 50% correction, set you up some protection, a put or two, and I'm not saying sell it now. I mean, you could sell it now, but if you're in it long term, set you up some protection. Take a 50% correction or have your levels. Like we break below the roadmap line, we're probably going on down. Microsoft already did this first move down, second move down. Now we're pushing highs. 508. Above that, 565. NVIDIA has potential for another big down. We didn't, I was expecting it back here. Then we went higher, got a big move, first move, came back up, pushed a new high. 164, we're getting that target today. 176, next upside target. Maybe we're not done extending. We can extend here. It's going to get really crazy if we extend here. Might be a $5 trillion company. We'll see what happens. Tesla still has that downside potential. First move down, second move down in the small time frame here. If we grind it down into earnings, probably going to get a pop on earnings. If we pop before earnings, we may see a downside. This one also has this bigger picture. First move down, retrace, second move down potential. But if we can hold on to this and break out, we negate this setup right here. 500, 700 upside targets in the near term. 450, 500, 600, 700 near term targets on the upside. Downside, 140 and possibly down to 100 if things got kind of nasty. All right, I go pull everything moving $2 more up, put it on the gainers list. Everything moving $2 more down, put it on the decliners list, and then bring some setups that are ready for action today. And that is not today's list. Pull today's list. There we go. So gainers, looking at VRNA. Well, it was up, but not looking so hot. A big pop, but watch out. That's biotech pharma. That pullback, that shoot up, and we can take it back, even though it's up 20%. Be careful on that. I don't trade biotech pharma, so, and it's a big warning when biotech pharma is dominating the market mover list. That's the time to be careful. This one, crazy can keep being crazy, but then it'll give it up and come back down. Reverse split over here. Be careful. It's a trash company. MicroStrategy. Now we're seeing yesterday giant chunks of calls getting bought. Last time we saw giant chunks of calls getting bought, we saw Mara go up like 20%. This could be indicating pent up demand for Bitcoin going higher. This has potential to take a dip down here if things turn sour, but if Bitcoin gets spicy, this thing probably going on up. Targets up here, 600, 700, 1,000 if things get really spicy. So, caught in the micro versus the macro. Macro, I am long, looking for this big pop up here. I'm looking for this big target. Micro, we could take a little spill back down here before we shoot up here. CRL, another laboratory commercial services. Yeah, I don't know that that's the bottom yet. Wow. A wave, B wave, C wave. Well, maybe that's an ABC type correction right there. Absolutely beautiful correction. Proportions are right. Resistance is right there. So if we can make it through the roadmap line here, rally up to here, retrace, and set that up. Opportunity, STRK. This STRK, STR, I can't remember what the other one is. These two may be the better way to play MicroStrategy. They just keep going up. STR, not M, F. MicroStrategy preferred. Looks like there's a D. STRD. That one's pulling back, but STRF. These are MicroStrategy preferred shares. They seem to be outperforming MicroStrategy itself. I mean, these just keep going, keep going, keep going. Pay preferred dividend. Rocking a dividend. So if this is something you want to get involved in, there you go. Caterpillar. Ooh, I like that potential. 445, 471. KZIA. Reverse split, garbage. Don't touch it. Skags. Here you go. I'm not touching that. That's a SPAC. Pretty sure. CoreWeave, buying out Core Z. They played Let's Make a Deal. Well, funny enough, this is, apparently people don't believe the deal is going through. This coming back down. The deal is for $20.60. That's interesting. We're getting this pullback. GE. And we're at targets. Watch for a pullback to the roadmap line. ARTO. More biotech. More garbage. Reverse split. IONX is... Those are leverage tickers on IONQ and Robinhood. Starbucks. Oh, come on, baby. If we can get through this resistance, I'm in... I don't know if it's 90 or 100 strike. It's somewhere right here. I have calls out to January 26th. If we do that pop, they're going to print some money. Maybe should have booked them when we did this, but I kept riding them and I rode through this. Now ready for that pop. Come on, baby. Conservative exit right there around 120. MNTN. Nope. Not gonna talk about that one. Circle, be careful. If this does this chop right here and breaks down, we may go back down to the bottom. This looks a lot like the beginning of a bubble pattern right there. Speaking of which, I mentioned I would talk about that on the NASDAQ, and I kind of skipped over that. Look at this. Let's roll back really quickly. Month charts, non-long scale. Look at this right here. That is like the classic bubble pattern. Look at that. Isn't that crazy? And then we're doing it again, only bigger. So if we start getting some chop, this could come all the way back down. That would be, whew, that'd be rough right there. So that was the other alternate view for NASDAQ right there. I mean, you can't, everybody knows we had a .com bubble. There's the bubble right there. Bubble pattern, clear as a bell. It looks just like that. If you want more candles, just jump down to a daily or even a weekly chart instead of the monthly chart. But there you go. Moving on. Back to circle. has the potential that played out. We chop around a little bit and take it back to the bottom. SBET, bubble pattern. Now, is it doing another one? Is it doing another double cycle here? Lower. We often see that lower high situation. This one, classic example of that. Smaller pop. We haven't taken this one all the way back to the bottom yet, though. TSM, still set for that 240 upside. QBTX, 2x on leverage on QBTS. It's crazy to me that this has a leveraged, like this is not even a very big stock. Probably coming back down to the roadmap line. The leverage probably going to get whacked. BA breaking on up. 240 would be my, like, this area. 240 to 260 would be where I kind of expect this to top out if we're just going to rip higher without pulling back. Evoke, another biotech pharma, not touching it. ETHU, if Ethereum could turn itself around, we might see this back up to the 80 area. Kind of have to look at index ETH. So where do you expect that Ethereum could go? If you expect it to go up to the target at 5,500, talking about 100% upside. So ETHU could see 200% upside. If we only rally up to like this kind of area, 30%, ETHU see like a 60% upside. You just expect us to come back to the right here. That'd be a 60% upside, 120% on ETHU. If we just came back to these local highs and not the all-time high. Sezzle, potential just to keep ripping. 320 maybe. I don't like that's, there's no, I'm a trend pullback continuation trader. There's no real pullback here, just a trend and EWAG. Just a wild guess. IONL, another 2x leverage on IONQ. IONQ has a potential to push on up higher to 58. So you look at the upside potential here. It's about 27% upside. So IONL, IONX, they, with those 2x leverage, could potentially see like a 40 to 60% upside right there. HOOG, 2x leverage on Hood. Hood probably going to pull back. Maybe retest the breakout. Maybe get back to the roadmap line. Maybe the roadmap line meets up over here. I don't know. Highly likely we eventually do the pullback. I am off of Robinhood for now until we do get a normal size pullback. DOCS, grinding on the roadmap line here. Got this high, we got this low, we got that resistance, and if we break through 90 on the upside, PROK. Biotech, not touching it. PSIX. Wow. That's probably going to come back down. Be careful. Smuckers. Can't seem to get out of their own way. And Muster at Pop. Muster. And yeah. If we can get the bigger breakout going here, nice potential. But right now, this just, we're just stuck in some sort of correction. This may need a lower low here to finish this baby off. We've been in this correction probably, see that higher high situation right there? Just like Facebook. This is what I'm talking about. Facebook Meta could do. This bigger ABC correction. If we tapped a lower low, that would be actually beautiful. And this whole correction may be done and we could go higher. 200 longer term. Smucker's definitely having some trouble there. Robinhood, another 2x leverage on Robinhood. Decliners, this is sometimes where we find the best opportunities, but this one, making a lowest low, and not much we can do off of that. WPP, That's also not looking so hot. T-Mobile, if the, oh man, I really like this pattern. This may go on my bullish list right here. If we hold this 618, we hold this 228 area, break back higher, rocket ship, baby. Got to break through that downtrend of highs, though. Been going. Got to break through it. Be super ideal if we back tested it. Oh man, this can be a reversal cooking right here. I like it. Am I buying now? No, but this is one to keep an eye on for the next couple of days or weeks. If we can build that reversal, that'll be your chance to load up. If we break down there, though, so sometime this month they are rolling out the Starlink service as an add-on to all T-Mobile accounts worldwide. And it's like worldwide service for T-Mobile via Starlink for like, it's like a $5 a month upgrade or $10 a month upgrade per line. Could be a big boon for both Starlink and T-Mobile. BGO. Well, I mentioned that was probably coming all the way back. We're not far away from coming all the way back down to 10. Be careful. ILMN, find a resistance at the roadmap line. One move off the lows does not make a new trend pullback continuation. Watching for some sort of pullback and a bust back higher. Like if we did this, held, pulled back higher, be beautiful for a continuation. AEHR. Coming back down, retest, roadmap line. We can do that. Set up potential to rally on higher to 16. Baba probably, oh man. Go for it. Go for it. I have a short on Baba. OMC. Nothing. That looks like nothing. Choppy sideways. Oil, natural gas pushing lower again. Natural gas looks like we're going to push on down, maybe make a lower low somewhere around 275. EVTL. Vertical aerospace, getting a retrace here. First move up off the lows, retrace. If we can hold, does have this reverse split over here, so garbage. All right, stuff set up for potential action today. There's your high, there's your low. 115, and if you believe in this one, then 122, and if you believe in this one, could be crazy big upside. 146. This is biotech. Be careful. Baidu. Despite Baba bouncing down, Baidu potentially bouncing up. Closed above the 618. Retracing a little bit. 97 upside target right there. Not too crazy. Just right there. We can still get that and still go lower in this choppy sideways hot mess here. I don't feel like that's the strongest use of your money. You can see very negative profit factor on Baidu. MDXG doesn't look super strong right there to me. Fun. I would not trade that either. SPGI. 1667. Step. And here's the high. Here's the low. There's this entry. 63.28 target. And that was a net loser also. Not great. This market's just not presenting great potential setups for that system at the moment. Just not doing it. Bias for the day. Ramp on out. Right there. Child. That's the target. Coming days and weeks. Maybe not today, maybe not tomorrow, but still bias long. Be careful though. This next one could be the last one. The count is getting full, as they say in Elliott Wave speak. Have a great day, everybody. We'll be back again tomorrow, same bad time, same channel. We'll go through it again, look for opportunities in the market,